How we doing, everybody? Welcome to another podcast with How to Make Money with Hard Money. Today, we're joined by my good friend and partner, Mike Jones. Everybody has kind of met him. If you've seen the podcast with the DKC team, you might have seen a little bit about Mike. But today, I'm going to give you an introduction to who Mike is. Unfortunately, we're missing our partner, Caleb. He is sick with pneumonia, so he's been down for the whole week.
Yeah.
So he will be missed today. But Mike is the president of our wholesaling company, Elite Cash Buyers. He's also a partner of Caleb and I's on DKC Development and a rental holdings portfolio that we have. So he does sell a couple loans as well. He's a loan consultant. So he's well-versed in real estate across the board. And he's a man of faith and a good friend of mine. And he tries to lift weights with me as well. But so this will be a fun one today. Welcome, Mike.
Thank you.
All right, so today we're going to talk a little bit about some wholesaling, about the BRRRR method, a little bit about the market. We'll kind of touch around the board. So we'll get started. So wholesaling, why don't you tell us a little bit about Elite Cash Buyers and what we do and some mission, purpose, values that we have.
Yeah, so Elite Cash Buyers, our goal is to be the best at sourcing off-market deals and creating opportunities for real estate investors. That's really what we strive for.
And so for those who do not know what wholesaling is, why don't we just give a little bit of an overview,
Sure.
on wholesaling and maybe functionally how it works?
Yeah, wholesaling is really, to break it down, it's sales and marketing to sellers trying to find and source off-market properties for buyers.
Yep. And how do you do that?
So we have a couple different marketing channels. Primarily, we focus on cold calling. Texting has been one that we've used. The regulations have really tightened up if you're listening in, November of 2023. So that's been tough, but we also do a lot of email marketing and also referral network.
Yep.
We've got a large network of realtors, brokers, things like that.
Yeah. Speaking of the referral network, we had a big event on Thursday, and I know you're really building the community around these events. Why don't we talk a little bit about the events? So Thursday, what was the event Thursday?
The event Thursday was primarily on the BRRRR method, but I had two primary goals around the event. One was to be a connector. So I wanted to get a room full of people in the real estate space at different levels in their journey and just get them in the same room. That way they can talk to each other, problem solve. To me, I'm a big believer in relationships, and I think you're always, one conversation away from changing your life.
Yeah.
So really wanting to connect people and, give people opportunities in that room. Yeah. The second primary focus was education. So I want to, bring to people that are looking either to get into real estate or are already executing at a high level, show them how we're executing at a high level and what we're doing to adapt and, find success in this market.
Yeah, I love that. And we've had two events now. Enrique held the first one. You had the second. These are events that are in partnership with DKC Lending and Elite Cash Buyers. There's a lot of symmetry between the two. A lot of times, even DKC Lending will provide loans on the deals for your buyers.
Certainly.
Right? So there's a lot of symmetry between the two. A lot of our borrowers are also buyers for Elite Cash Buyers. So it works out really nicely. And these events, do we have another one coming up soon, or are we going to continue to plan them?
Yeah, this is going to be a monthly thing. We want to keep bringing people together, keep educating people. We're consistently adapting in the market, so I want to keep showing people how we're doing that.
Nice.
So the next one, the details will come out probably within the next week or so, but It's definitely in the plans.
We'll keep it posted. It might even be out by the time we launch this show, so we'll include any details if so. So wholesaling, there's so many different methodologies, right? And people are using different tactics, as you mentioned. There's going direct to seller through, mailers. You can door knock. I've seen people spend a lot of money also in paid marketing. Why don't we talk a little bit about some of the avenues that we've found success in? Because we have not spent millions of dollars on paid ads, not yet, but we've had quite a bit of success as well. So why don't you talk about some of the channels that we're working through right now to get good deals off market? Sure.
And I think that was one of our biggest challenges coming into this was, how do we come into a market and compete with the guys that are spending, 50, 100 grand a month?
Yeah.
And I think one of the big things for us was relationships. Who do we know that is currently doing deals? What realtors can we talk to? How can we lean on our network to find deals?
Yeah.
In the meantime, that way, while we're ramping up the company and looking at these other marketing channels, and I think cold calling was a big one that stuck out for me personally, my belief is cold calling will always be a cornerstone of wholesaling.
Yeah. Yeah. I love that. We always talk about, cold, like getting your hands dirty, right?
Sure.
To me, cold calling is that. It's getting your hands dirty. It's not fun. It's not sexy. People don't love to do
Right.
it. Sit there for 3 hours and rip calls to
Get
sellers.
punched in the face.
Yeah. People don't always love it. You're not speaking to the happiest of people at times. But the door knocking as well is another cornerstone, I think. And people are targeting the same houses often. If you show up on a property tax deed list, and you're about to lose your home to a property tax, or you're going through a divorce, or any of these issues that become public record.
Sure.
They can be there's vultures, and people can come after you.
Heavily targeted.
They're heavily targeted, right? And so we try to bring a different approach, because we know that these sellers are being heavily targeted, and I think you do a really good job of that, and trying to bring a different aspect than everybody else. So maybe you can talk a little bit about once you get the seller on the phone and they've heard from 20 different wholesalers already. Sure. What are some of the things you're saying to these wholesalers?
Well, and that's a great question. Yeah, that's a great question. To even go back a step, I think a lot of it is about the data and who we are targeting.
Yeah.
So, you've got pre-foreclosures, for example, is super heavily targeted. So how do we go in and dominate a market? Well, by shifting to who is not being heavily targeted. We do a lot of absentee owner data. So we're talking to other investors that in this market might have a cash flowing asset that now needs repairs, and they go to look to do a refi. And with the interest rates, the cash flow isn't really going to make sense for them. Yep. So that's where we come in, and we really target absentee owners who have high equity, who have owned the property for a while. Those are the people that we're primarily talking to. And I think what sets us apart is our experience. When I get on the phone with the seller, being able to talk with confidence about, hey, I'm looking to either add this property to my rental portfolio, I'm going to fix it up, put it back on the market, or I'm going to bring a partner in on the deal. So it's being able to have that conversation with confidence as an actual investor with these sellers. It provides a different level of service. Yeah. And we really primarily go in focused on service with a great sales process.
Yeah, no, that kind of speaks to that vision, purpose, values, right? I think from the beginning, we've set the company up from a values standpoint where we are trying to provide value to the sellers. We know that they're targeted and being bombarded with phone calls, but they do have a need at the end of the day, right? And they do need to sell their property most of the time. And so we want to try to find that win-win situation, or the win-win scenario for both parties. And I think you do a good job of finding that and finding what the source of the issue is that they're having, and trying to be a remedy for it.
Yeah. And I think one of the things too is, we talk a lot about creating opportunities. We're not just creating opportunities for the buyers. We're creating opportunities for the sellers as well.
Absolutely.
When we go in, we're going to give, 3 different offers. Here's our cash offer. We can list it on, take it to the open market, try to get you a higher price, talk about some creative finance, things like that. You've got a lot of guys. I talked to a seller the other day. I'm like, what are you going to do with the money once you sell me this property? He's like, honestly, I don't know. I didn't think about that. I might, go give it to my money manager. He's telling me he could probably get 5 to 6%. So it's like having these conversations and really thinking through and allowing them to really step through the entire process and providing value on the backside. Maybe in some situations we can pay a higher note value and a higher interest rate than they would be able to go get with, a money manager.
I love that. I think that's really good. So also, I love wholesaling because it's a great introduction for a new real estate investor, right? It's a great place to start. There's obviously levels to the game, and there's guys that are executing to a very high level, like ourselves and other, referral sources that we work with.
Sure.
And like you said, some people are spending $50,000 to $100,000. They're still finding a lot of success doing that. And then we also know wholesalers that are, spending a couple $100s a month and finding success, right? So there's a big spectrum here, and you don't need to have money to get in the game per se, right? Because you can potentially get properties under contract and then sell them with no down payment, right? So it is a good introduction space for people. So if you are a new real estate investor and somebody were to ask you, how can I get into wholesaling? How would you guide them?
That's a great question. And I think you're absolutely right. There is definitely levels to the game. So for someone new coming into the game, I think it's really, what do you mostly have and what are you trying to accomplish? So do you either have time or money? For people that have more time, you can spend a couple $100 on a list of some data, figure out who it is you want to talk to, get on the phone, start calling them. Pick up the phone. You're going to spend a lot of time talking to people, but if you've got more time than money, that's a great avenue to get in with a very low barrier of entry.
Brilliant.
If you've got more money than time, hire some cold callers, create a system and a process to where you can spend less time in the business and put more money into marketing channels to, talk to these sellers.
I love that. Great answer. Now, technology is changing things daily, right? Especially in the wholesaling space. I know from 5 years, you've been doing this for quite a few years, but even 5 years ago, the technology has changed a lot from today. What are some of the ways you're using technology to, increase your business?
That's a great question. So we've got a good CRM setup. Number one, we've got a really good sales and follow-up process. We've got a lead manager that, follows a pretty strict process on getting people on the phone, talking to them, following a good follow-up schedule. A lot of this game is follow-up.
Yeah.
You're not getting on the phone. The one call closes they're few and far between.
Yeah.
So it's really about the sales process and follow-up. And from a technology standpoint, right now we're playing with and exploring how do we introduce AI into our sales process, especially on the follow-up side. How can we automate this and introduce AI to the point where, we're consistently talking to these sellers and following up on the right times and really looking at seller indexes. When are they most likely going to want to sell and be in a position to sell? Yeah. So it's a lot about the data and introducing the different methods into it.
Yeah, AI. So we're still so early on in AI, right? I mean, even we're trying to figure out how we can use it on the lending side. Right now, there's the sales and marketing side for us on the lending side, and then there's also the loan servicing side.
Right.
It's so early on, and we're building our own software right now on that side and trying to incorporate AI. It'll be really interesting to see how AI can help, because I can see. I can see some uses potentially here, how ethical that some of them could be, from a touch point perspective and privacy.
Sure.
It'll be interesting, and the rules and regulations will probably have to keep up with the changing technology.
Certainly. And it's also with the borrowing index as well. When is from a borrower standpoint, if they've got a current mortgage, when are they expiring? What rate are they at? When are they going to be most likely to start shopping for a new loan?
Yeah, the AI being predicting the demographic data and really tying together. I mean, we kind of talked about that with a couple potential vendors we were going to work with about the demographic data they can pull right now, and they can see your credit cards, your Facebook, your Instagrams, and what you're searching on Google, and then kind of try to pool what they think that you're going to do next and really start predicting things, which can be probably pretty scary at times.
It is. It is.
But they're watching. So I guess you mentioned the changing markets as well. We'll kind of talk about that from a bigger picture today too. But what are you seeing, and what are some of the things that has impacted your business on Elite Cash Buyer specifically over the last year when we had a big market shift?
Sure. So I think even just the point of starting Elite Cash Buyers came from a necessity of we were doing a lot of fix and flips, and we really struggled with consistent deal flow, especially in a competitive market. August, July of last year, there were a lot of buyers that were willing to pay more than us and had a higher risk tolerance than us. So for us, Elite Cash Buyers, the purpose of it was to bring that in-house, create a machine that consistently produces deal flow for us. So in this market, one of the big shifts for us was the data. Who are we talking to? How are we talking to them? What is our sales process? It's certainly been tough for everyone. So I think, really diving into having a really good sales process and figuring out who you're talking to, who are you targeting, that's been a really big shift for us.
Yeah, I like that a lot. And then the network piece is the second part that we've all leaned heavily on. And I think that's something any new investor can do, is they can start to build their network. We talk about that a lot with some of the younger consultants on our team too. It's like building your network. And even now I reflect back at, been here doing this for about 8 years in the Bay Area. A lot of my strongest connections are connections that I made in the first 2 years of being a new realtor, you know, and me growing my business and them growing their business. And then, we have that mutual respect and we've grown together. And so I think that for newer real estate investors, just growing your network is a huge, initial place to start.
Right. And that's why, just to tie it back to the events real quick, just being the connector and being in those rooms, talking to people, I remember going to those events when I was new, and it's pretty intimidating. You're in there, you might not be doing deals yet, you're not really sure what to say. And one of the things that I mentioned in the events is, don't be afraid to talk to people. Yeah. Talk to people about the problems that you're facing. Most people genuinely want to help.
It's a great point, especially guys that have done it too,
Certainly.
right? And they've had somebody that helped them probably.
Exactly.
And they're happy to, continue to pass that along and try to help others. And I know you do that at your events every day. So yeah, we'd encourage everybody to just start getting out there and to get to events and start shaking hands.
Yeah.
And so our next event is going to be a great place to start for that.
Certainly.
And we'll kind of, like I said, we'll tag the notes below.
Yeah.
So I think that's probably a good transition over to the BRRRR method, which you previously spoke about at the networking event. I know we've recently, on the holdings company we mentioned, we completed about 5 refinances and considered BRRRR methods over the last 90 days, I guess. We found difficulty along the way. We've also done a couple other projects I think we'll talk about today that were in different markets, but the BRRRR method remains a useful tool and a strategy to look at real estate in all markets, right?
Certainly. And just to explain what the BRRRR method is for people that are listening that are not familiar with it, it is it's an investment strategy to buy a property, rehab it, rent it out, and refinance it. And then also some people also include repeat in there as well. So it's a cash flow game. And I think, David, there was a project about a little bit over a year ago that you executed the BRRRR method at an extremely high level and did it really successfully. You want to tell us a little bit about that project?
Yeah, about the apartment complex.
Lowest.
Yeah, we've spoken about this one on an earlier podcast, but I think we can dig in a little bit different angles today. Because it is, just like you said, it's a good example. I mean,
Certainly.
It's a 20-unit apartment complex in Tampa. We bought for around like 2.15, let's say, and then the deal with that one was the biggest obstacle was our hard money loan. It was a 6-month balloon on that versus a 1-year balloon. So we really had to get through the project pretty quickly. Yeah. But we bought it, same thing as what he mentioned from a BRRRR method perspective. We bought it for like 2.165. We put about $500K into the deal. We were all in after closing costs and cost of the hard money loan, right around 2.8 million. We got the appraisal at like 3.9 million in 6 months turnaround. So we bumped rents from 900 to 1700 in a 6-month period. All new roofs, ACs, windows, parking lots, landscape, you name it. We did it all. Sure. Renovated the interiors top to bottom. And then we procured a bank refinance and pulled out about 2.45 million from that. We did a 10-year term. I can kind of talk about loan terms. It can get complicated for those who don't really know them. It was a 10-year term with 2 years interest only. We locked in at that time 5 years of 2.5 interest rate, and then in about 2 years from now, it'll go back up to a 0.5 point over prime, where we will be looking to refinance again. So we can kind of talk about some of the details in there. I know it can be a little complex, but yeah, we used a hard money loan to buy it and fix it up, and then quickly refinanced at a new appraised value to pull out that cash. And then right now we have, a 10-year pro forma for strong cash flow.
Sure.
That's what we're looking for.
That's great. And I kind of want to dive into the loan products a little bit too, because I think that's where a lot of investors struggle a little bit, is not knowing what tools are out there. And I think that's where the community and relationships are important, because these tools and loan products are constantly evolving. So just to take it back to the beginning part of the deal, can you tell me a little bit about how you acquired the deal? Was this something that you were specifically looking for, or is this a deal that, fell in your lap type of thing?
Yeah, no, we had a real clear buy box that we were hunting for multifamilies on. We wanted to be, let's say, within an hour and a half of the Tampa Bay area. We wanted to be, 1970s to 1990 builds. We really kind of were fixed in. Those are typically block builds, block first story, frame second. We like those 2-story quadplexes, essentially. Right. We've done several projects, as you know. I mean, we did 4 other projects that had these quadplexes. So you get like one building with 2 units on the bottom, 2 on the top, staircases on both sides. And then you get like as many of those types of structures as you can. Sure. So we knew that from a construction standpoint, we knew from a location standpoint. And because we've done projects in the area, we knew roughly what rents we were looking to start at and then get to.
Right.
So we did have a really clear buy box, and we shared that buy box with several wholesalers and real estate investors in the area, realtors, all, you know, we were pumping that buy box out to everybody to make sure they knew this is what we want and that we will close fast, we will move quickly. I mean, I've said the story before. We closed that deal in 10 days. It was like eight days.
Yeah.
So not a lot of groups can move that quickly. So if they know, hey, I'm really clear on what I want and I can move quickly on it from a financing perspective, you know, it puts you towards the top of the list from a buyer's perspective, as you might know, because you'd be looking to sell that to somebody like ourselves.
Yeah, I mean, I think that strategy of, you know, having clarity about what you're looking for and then being able to execute, that's one of my biggest advice pieces for newer investors, because, you know, you can look at a million deals every single day, but you're going to stress yourself out on how much opportunity is out there until you really get clear about what you want and exactly what you're looking for.
And so Caleb and I did that project together, and we had another partner, and then you and I and Caleb have probably looked, we've tied up maybe 6 or 7 other projects that were similar under contract since that point. Again, we were really clear on what we wanted. We were really clear on the cash flow and financing that we could procure, but we couldn't make any of the numbers work, right? So not lack of effort, but we were clear on it, but we were not afraid to say no and walk away when the numbers didn't work either, you know, and that was market-based. We've talked about in the last one, the Great Divide, especially on multifamily, has been very challenging. So understanding your buy box also helps you say no when you're not hitting.
That's a great point. So tell us a little bit about on the LoSAP project, as far as the construction and the rehab went. Did you have a specific, you know, thing that you were looking to go in and accomplish? Did you have, you know, certain people that you were working with to accomplish that? How quickly did it go?
Yeah, so even from a strategy perspective, like I said, we were clear on what we wanted to buy, how we were going to procure the initial financing. I think one thing that I see some groups, you know, maybe miss or not get as detailed in is the exit financing as well, or the exit strategy. So we knew exactly what we could get from a purchase financing, from a hard money loan perspective. We knew the rate, the term, the points, the down payment. We knew all of that. We also knew what the exit financing was going to look like. We knew what the DSCR needed to hit. We knew what the, you know, what equity we needed to leave in the deal. Even, you know, I mentioned to you, like, we had that $3.9 million appraisal, and their rule of thumb was that they'd go up to, I think it was 75% loan to value. Well, that would have cashed us out of the deal in this instance, but they declined to do so because it was up to 75% or 15% of your cash basis. So they want to make, the banks at that time wanted to see you leave 15% of your equity in the deal, of your cash basis, especially when you're turning the project over and increasing value so quickly. So we knew that as well, because if we didn't, we had to leave, as I mentioned, like, it was like a 2.45. We were all in like 2.8. So we left like 400 grand in the deal. If we didn't know that and we didn't have the 400 grand to leave in the deal, we would have been forced to fire sale at a discount. And so just understanding what the circumstance was up front allowed us to have those options.
Yeah, that's great. And you also mentioned interest only period. What is the power behind using that product?
Yeah, interest only can be really useful when you're stabilizing an asset still. So when we refinanced, I think we had like 15 out of the 20 doors complete. We still had 5 to do. We couldn't get through them all in 6 months because some of the units had tenants in them. So you just literally couldn't renovate them. So they did a holdback on the loan. And so in their eyes, the property wasn't totally stabilized. There was still work to complete. And so during that period, they think of your cash flow as, you know, as still, you know, a work in progress is the easiest way to say it. And so they'll give you IO periods if you're in that stabilization period. Interest only reduce, I think from a tangible, what does that mean? Our payment right now is like $15,000 a month with interest and principal. Our IO payment was $5,000. So it increased our cash flow. So we had 2 years of increased cash flow by about $10,000 a month. And so, you know, that's almost $240,000 right there that you can put back in your pocket. So if we put 400 grand down and we got 2 years of IO where we were able to achieve almost 250K in cash flow, you can essentially pay yourself back. And now you left 200 grand in the deal instead of 400. And then your cash on cash return can increase. So IO can be really useful to increase cash flow for a short period of time while you're stabilizing an asset.
And the health of the asset, I think, is so important during that period too.
Absolutely. And that's what the IO really did. Even if you were on the bubble of maintaining the principal and interest, cash flow, like with the IO not having to pay that 10 grand in principal, it really gives you a cushion. Yeah, a big cushion.
Yeah.
And we needed that because the tax bill came in higher than we thought. You know, the insurance came in a lot higher than we thought, and on the second year renewal. So it was really helpful to have that.
That's great. Can you tell us about maybe one of your biggest challenges in that deal and, you know, how you overcame it?
Yeah. I guess one of the biggest challenges was sourcing the deal, certainly, and finding deals in that market was really difficult. So once we found it through a really good referral source, I'd say the next obstacle was the speed and getting a 6-month balloon. So at DKC Lending, we offer 1-year notes, and we will always renew that year to its 2-year term with compliance of the loan. That's really important because that 6-month note we took from a different lender, because he gave us a little higher LTV, it was really challenging to complete that project. And we had to start the refinance at almost 4.5 months in.
Right.
It's like, it was like, that's 120 days or something. It's like, it was really, really quick.
Yeah.
So the speed of moving tenants out, renovating, moving new tenants in while you were renovating, we like to take on the exterior first when we're renovating an entire project like that. We like to try to put the roofs on, the windows in, paint the outside, do the landscape, because if you have a brand new renovated interior unit with stainless steel granite countertops, and then you're walking into the property, it's a construction site everywhere, and you got roof shingles falling off, it's hard to get the top rental price.
Sure.
And if you lock in a rent price in the beginning that was discounted because the site was under construction, it's discounted for 12 months. You're locked in on that lease. Yeah, you're stuck with that. And that can really affect, you and I went through that exercise of the pro forma on that deal. $50 on a rent price can change the cap rate.
Yeah.
Significant.
Change the whole deal.
And you can put a couple $100,000 down by $50 per unit here and there, so it really adds up.
That's great.
So it's a little bit of a long answer, but I think the speed of the transaction was challenging.
Yeah.
So get a loan from DKC Lending next time and get yourself a year.
That's right.
With the renewal. Even on the 6-month balloon, if we hit 6 months in a day, it was like $50,000 fee for the day.
Yeah.
For the day.
Right. That's huge.
So it's massive. And so that was a little harsh in my opinion.
Yeah. It can make or break a deal, really.
It really can. So I think that's a good transition over to into the market perspective. Sure. So I know we both have as the CEO of a lending company and then as the president of a wholesaling company, we have different opinions, but there are different perspectives, I should say. But the opinions are pretty similar because we're seeing a lot of the same things.
Right.
So what are the things that you're seeing in the market right now? What are some of the biggest challenges from a wholesaling perspective today?
I would say with the inflated interest rates, I think, one of the biggest challenges that we're talking with, primarily our buyers is we saw a really heavy fix and flip market last year. And this year that's softened quite a bit. So when we're, talking to buyers about, what are you looking for? What are your goals over the next 6 months? And what do you want to accomplish? Because our goal behind that is, going to find the properties and source them the deals to help you accomplish your deals, or help you accomplish your goals, I should say. So one of the biggest shifts that we've seen is, looking more at rental properties and, trying to figure out how to make these deals pencil on a DSCR loan.
Yeah.
So what about you from the lending side of things? What has been one of the biggest shifts for you?
Yeah, similar. We talked about fix and flip products kind of going away and a lot of refinances and fix and leases. So I think right now over 80% of our application flow are, I say, like longer term outlooks. So even if they're refinancing with a 1-year loan. Yes, they're bridge loans, but they're refinancing because they want to hold the asset longer, and there's so much uncertainty around the future interest rates. And so I think that it's a flexible bridge product. It allows the borrowers flexibility. And then even on the fix and leases, they're buying it, fixing it up, sticking a tenant in there with the goal to procure a DSCR loan and BRRR out of our bridge loan.
Right.
So that's a long-term outlook too. They want to hold the asset for a long-term rental portfolio.
Yeah.
So real investors today are looking to grow their portfolio or stabilize debt for long-term holds. I think that's what I'm seeing more of right now. The interest rate rising market, there's just so much uncertainty, and there's a lot of bank restrictions also. So private lending remains very useful in the market for speed of closing, certainty around getting your cash. If it still can be competitive if it's the right deal, as we know, because we were we're trying to buy a couple holds ourselves. If you want to buy it at the right price, it's still competitive because there's other buyers that have cash. So you need to be able to put your deposit down and close in a timely manner.
Right.
So I think that's what we're seeing from the most part. It's the rising interest rates, the banking restrictions. Private financing is growing and has a big need in the market to fill that void.
Sure. And I think also on the wholesale side of things too, the common answer is, typically, well, just buy it cheaper.
Yeah.
Give me more of a discount.
Yeah.
And I think for us, one of the things that we've done to embrace that is really diving into our sales process, working with, like Steve Trang on doing sales training and really sharpening, how we are talking and having these conversations and what is our process that we follow, with each one of these sellers too.
Yeah. And you see us doing that on the lending side too, trying
Certainly.
to, we talk about how in tough markets, you need to be a savvy, skilled salesman. You need to know your product. You need to have mastery. You need to be able to provide value to your clients. And in this market, it's not just, hey, grab the term sheet and we can fund in 3 to 5 days. A lot of times we're, negotiating debt for them, restructuring entities.
Sure.
There's tax liabilities. So we're really helping and trying to provide value from a real estate investor standpoint. And that value, borrowers recognize that we're going above and beyond. We're trying to help them get better insurance quotes and process the file timely for them. And so I think being a master at your craft in tough markets is what, helps you survive tough times. And I think whether you're a realtor, you're a wholesaler, you're a title agent, you're an inspector, when the market was strong, there was a lot of business for everybody.
Sure.
When the market slows down, I know all of our realtors and mortgage broker friends, they talk about it's a tough market right now. It's a tough time. Mortgage applications are down. Sales on real estate are down. So you need to really this is a great time to hone your craft.
Yeah, and I think you touched on a great point there because, and I know we share this opinion of, I love this market because for me, it's a separator. This is separation season too. Are you really committed to what you're doing and really, like you said, honing your craft and being a master at it and providing the most amount of value that you can?
Yeah.
That's key.
Exactly. And from us as lenders, we're lending to real estate investors.
Sure.
And so the value we can help them is as real estate investors, giving them a different perspective and what might we do in this instance and really become a partner in the deal.
Yeah.
We are the partner in the deal.
That's huge.
Because we don't want to see anybody fail. We provide loans to help investors and also protect our principal. And to do so, consulting on these deals really helps a win-win scenario for everybody.
Yeah, agreed. And even from a wholesale side too, I tell people that all the time. We are looking at these deals from an investor's perspective. So we're not just trying to lock up a deal, slap a price on there and make a fee.
Right.
We're looking at it from an investor's perspective. Hey, here's how I'm running numbers. This is what I'm seeing. Let's sit down and go through the deal because for me, relationships are really important. We're not here just to turn and burn and, just pump numbers through the system. We're looking to build long-term relationships with people.
It comes back to community and building a community, you have to provide value. And that's what we want to do. That's what we want to do through the events, through our social media content, through this podcast. I hope people are walking away from listening to this with some value and something that they can implement into their business today to help grow. And so I think at tough times kind of brings that to the forefront. And I think that this is a tough market and we're just recognizing that step one. And then learning how to navigate it and strategize through it and doing that with community members who are doing the same thing.
Sure.
There's plenty to go around for everybody and it's a small network also. This town is small. If you start turning and burning and start selling deals that don't make sense because you just want to catch a fee and run, it'll catch up with you quickly.
Certainly.
Certainly. So cool. Well, I think that was really good today. I think we touched a lot of good points.
Yeah.
You want to finish up by, I know you and I both are big advocates of the growth mindset and,
Sure.
and community. And I know that means a lot to you as well, even from giving back to the community perspective. So why don't you tell the group here, what are some things that you're doing right now to give back to the community and continue to grow outside of just the events that we're hosting as well?
Yeah, I think it's even, talking to investors on a daily basis. I've got a link where you can book a 15-minute call with me and really we can use it as a strategy session. Let's look at what you want to accomplish and how we can help you accomplish it. And even if it's not with us, there's been a lot of people where I've talked to that, hey, maybe this deal doesn't make sense for you. if I were in your position, here's how I would go about it.
Yeah.
So really providing value to people and just having those, conversations. I think the other part about it too is just really looking at, the events being one thing. So talking and connecting with people, but the biggest advice that I can give people, and we kind of touched on it earlier, is gain clarity around what you want and then design the system or the business on how to get that.
Really good.
What money do you want to make? How do you want to spend your time? What environment do you want to be in? Once you set that criteria and get really clear about it, then you find opportunities that fit within that box.
Love that. Love that. I'll ask you the question to end it that I asked Rob last week. I think that was a good one. I'm stealing it from Lewis House straight out. But it's, if you were to die tomorrow and all your work was wiped away and you could leave one thing behind for the world to know about yourself, what would it be?
That's a great question. I think for me, it's just about tenacity. Tenacity is a big word for me, and I think we all go through different levels of adversity. So for me, I really want to be an example to everyone that knows me of just being able to go through any level of adversity and being committed to getting better every single day. That's really, really important to me.
Great answer. Awesome. All right. Anything else you want to add today?
That's it.
Mike Jones. Beautiful. All right.
Thank you. I appreciate you having me.
Thanks for tuning in for this episode of How to Make Money with Hard Money with Mike Jones. Like, subscribe, and follow DKC Lending on all social media platforms.